Welcome back to the Opportunistic Trader for September 20th, a Thursday, day before triple expiration, or somehow they say quad expiration, Vince says. It probably is. It's probably more than quad. So
There's another exchange somewhere with options going off.
exactly. Basically, yesterday was a quiet day, no trades, holiday day. The bias is in place for the option expiration. The rig is on, as you could see. It will print a price that no one ever dreamed about. That's what they do. It's amazing. It's been, so clear for so many years. And the play is to be long front and short back. We gave that to you earlier in the week. That's working well in the long bias as well. We will be selling S&Ps on tomorrow's opening. But for now, we're kind of quiet. We will come back after the opening to see if there's any trades to be done. A lot of the market move, unfortunately, has been taken out by this up trade here. Scouring yesterday's action, really, the action was in cannabis or pot stocks, going absolutely insane bonkers. And I know you have a lot of thoughts. You can chime in. We'll start there because it's pretty crazy, and market caps are insane. And I think I'm gonna, like they were talking, McDonald's is gonna make a cannabis drink. I mean, what are people, everybody in the world's gonna walk around high?
Yeah, well, Coca-Cola is definitely looking into seriously making a soda without they're filtering out the high aspect, but keeping in whatever the good aspect is. I don't know. Coca-Cola as cancer treatment, go figure.
I don't
But
know. I just know
remember, Coca-Cola did start with cocaine in it, so it doesn't sound too crazy.
I was somewhere last night with a bunch of people, and everybody is into CBD. Everybody's selling it. Everybody has it. They have it in gummies. They're pulling it out. I don't get it. So, it's way past me. Obviously, there's amazing opportunity there. Probably the opportunity has passed when Tilray sells $20 million worth of marijuana and has a market cap of $27 billion. So I don't know what's there, but, I wanted to point out, Mike mentioned this yesterday, that the guy left from Citron is a short player, and he's just getting rinsed to a level that is unbelievable. And then it's just not only marijuana stocks. I think it's every stock that he's short. They're just ramming up. So, it's interesting. Maybe keep on your radar those stocks. We potentially could give a list of that. But a lot of times, like we called it like the Ackman play a couple of years ago, where everybody knew what he was long and they just doused it. So, I think maybe a lot of this is short players in these stocks. But overall, it's a pretty amazing move that we didn't really participate in. The only one that really had it was Tony Greer, and it'll be interesting to hear from Tony to see later. I think he's coming on at 10 to see if he still has positions, what his thoughts are, and I'm sure he made more money than he ever thought he could make when the stock goes from 50, IPO'd a couple of weeks ago, to over 250. It's pretty amazing. So, any thoughts?
You referring to Tilray specifically?
Well, I don't know. I mean, all of them: Kronos, Tilray,
Yeah,
Canopy.
If you're looking for stuff to move, and obviously that's what you're talking about. I just had a couple stocks on my radar, and two of them I think you've already discussed. But Tilray is these are explanations. These are you should continue trading what moves. Tilray, for right or wrong, is absorbing all the demand for stock for people that believe that there's a big disruption going on in big pharma now, and what was good for Amazon was bad for CVS. What remains to be seen is what is good for Tilray and pot stocks in general as a pain reliever. Will that be a negative on big pharma? or would big pharma, end up buying one of these companies or creating their own synthetic derivative? I don't think. I'm not saying I would short Tilray, but I don't think that big pharma would be a short like Target and CVS were for, say, Amazon, because I don't see a protective moat around their product. I see big pharma coming up with their own version. So all that means is there's probably going to be more volatility in other stocks to look forward to if you're trading. Moving on to one of your favorite sectors, Micron has earnings out after the close.
Oh, I've
MU has
been.
earnings after the close, and their implied vol, although I don't have the number in front of me, has been higher across, for the last couple of days in anticipation of that. Bearish or bullish, who knows? But people are definitely putting on plays in anticipation of that information. I think last let's see, the last number was I'm going to say 334. That doesn't make sense. Maybe that was it. Maybe 334 was the last earnings. I'm not sure. You'd have to look that up. The
Yeah, I've
other
been.
stock that I'm looking at is a cousin of Micron, and that's AMD. AMD is a chip maker that in March was a victim in quotes, of a research report by a company called Viceroy. And Viceroy made their name by putting out a bearish report on some South African stock. And then they did the same thing for AMD. The report was seen as a load of crap, and AMD has just rallied relentlessly since then. And I got to think, as a regression to the mean trade, there's probably something going to come off there. Finally,
I want to stop you on AMD just for a second
yeah,
because
sure,
I don't
I'd
really
love to
trade
hear
the
it.
name, but a bunch of years back, when we were running the fund, I had an individual who will, if he's listening, chuckle or cry, who was long over 2 million AMD at under $3, and the stock
Really?
wouldn't rally for basically a year. We punted that position, obviously, and you see the result 10 years or 8 years later. It's pretty amazing, but I just laughed to myself because AMD was a pretty big long in our portfolio at that time, and it was really a dog. So now
And
now
they
it's
had
over
headwinds
30
from
and they
Intel
love
at the
it.
time, right? It was hard to hold on to AMD those days.
Yeah, well, because they were getting their lunch handed to them or whatever.
By Intel.
Yeah. So anyway, I'm sorry to interrupt you, but I just
No,
thought it
you're
would
not
be
interrupting. You're
it
helping.
would be interesting to point out. That's how the market is. It's a very funny market. That's why really the investor has done so well in this tape, because they never sell. And if you never sell, all of a sudden you open your eyes and you have Microsoft for 10 years at $20, and you look up, it's 120. So, these moves have been epic, and people have really done well. So
I
anyway.
think long-term investors and very short-term traders have done well. It's the people who look at stocks, uh, every 3 months that freak out, or they read a headline in then 2008 and they panic or buy puts. But
Well, people freak out every day, believe it or not. I mean, I have a family member who is a portfolio manager for a large bank, and any down day, he's getting calls, literally on a down day.
well,
He's
then
like,
the trade
listen,
is to be long Xanax, right? I mean, you have to.
well, or go to sleep and not watch. But
Exactly.
anyway, sorry to interrupt you.
No,
You
no,
were
no, no.
about to
Just,
talk
just
about another stock, so go for it.
no, no, no. That was those are the stocks that I was. I mean, obviously, there's many more to look at, but Tilray for obvious reasons, Micron because earnings are coming out. I know that's in your wheelhouse, and AMD because I follow them as a proxy for following a company called Viceroy, which does research. I bring that up because Viceroy did their most recent report was on a company called a mining company called PVT is their ticker, Pretium Resources, and it's a small company. It happens to be in mining gold, and they slammed it with a report, and that stock has just gone up since then. So I'm just saying, if you are an active trader in stocks, and you see Viceroy coming out with a comment on someone, I'm not saying you should be getting long, but I am saying you should be paying attention because it will have an effect. Moving away from stocks into
well, no, let's do this. Okay, usually our mantra is to go over yesterday's action, yesterday's trade, and then on to today's macro picture. But since we're talking stocks, we usually get to that last. We're gonna just do it first. So let's just we'll get it out of the way. Interesting. Yesterday, today is back to the same old, but yesterday was that mantra we've had a couple of times over the last couple of weeks where there's been a complete underperformance of the FANG or Nasdaq high flyers and then a buyer of Dow. And at one point yesterday, the Nasdaq was down 60 and the Dow was up 150. So we keep seeing that kind of stuff. And then like the day later, they just rebuy the Nasdaq and, put it back in buy mode. And that's what we're seeing this morning. Apple yesterday was falling off a cliff. They had some issues. They were worried about the sanctions and the tariffs, and it was down. It's rallied about 4 off the low. Facebook went below 160, 164.5. Netflix is on the buy, and Amazon is languishing, still up 10 this morning, but looks a little bit heavy. May trade below 1900. I'm even scared to say that number, but 1900. And Tesla is back above 300. I guess the government stuff doesn't mean much, but that's really what I see. The trades that have worked well that we really haven't done, but we've suggested looking at is this Micron trade. Micron has earnings, so for me, if I was in it, I'd be either hedging with puts or getting out.
Vol's a little higher, so I would be interested in hearing what you have to say as the end of the day approaches on Micron.
Yeah, I mean, look for a way to play it or to hedge your long stock position into earnings. Earnings may be a little bit weak. I know there were some downgrades. Goldman downgraded Micron at like $41. It's trading at 46, down from 67. So. It's interesting. And then FXI has had a good rally, about a couple of bucks right now, which is the China big cap. And China was, flat last night, as well as most of Asia. Europe is up across the board. The DAX is about 300 points off its low, which it had no bid for weeks and weeks and weeks, and now it just goes up quietly every day. Our S&P is in stoked mode for the expiration. I didn't think we'd have this. I'm a little bummed because I wanted to put on some long stuff into today. It's going to inhibit a lot of what I would look to do. But we'll look at some spreads there. The Nasdaq is up, but slightly underperforming the S&P. Actually, it's not. It's kind of on par with the S&P, but yesterday was a bit of a change. I mean, since I walked in this morning at about 7 o'clock, the S&P was up like 5. It's just tick up, tick up, tick up. It's up 11. I guess this is part of the whole thing.
If I can throw something in there, that's totally related to 3 different topics you've been talking about, although right now you're getting into the granular aspect of it. 2 days ago, it became, quote, safe to buy emerging markets. And that came from a go-ahead. You started seeing banks buying emerging market bonds. And for the last 2-3 days, you've seen emerging market stocks stabilize and rally. EEM is up another 1.25%, 1.3% today. G10 stocks in general are flat, as you just said. What I'm getting at here is towards something that we just constantly roll our eyes at. The emerging markets, let's just assume for the moment that it's okay to buy emerging markets now, whether it be bonds or equities or even possibly their currencies. And yet the S&P is not down. It may not be as up as much as it was, but it's not down. So you have to look at the markets as not discounting cash flows.
But the S&P is on an all-time high, as well as every other market. So I don't know.
What I'm saying is, what's good for the S&P is bad for the world, and what's good for the world is good for the S&P, which something has to give, which brings me to the third point. If we stabilize, and it looks like we're doing that now, above 3%, I think it's going to have a chronic, this is just my opinion, I'm looking for a chronic weight to start pushing down on the S&P. Mechanical things that you're discussing aside, I'm looking for reasons to be short as long as we stabilize above 3% in a 10-year and mechanical things like expirations get out of the way. I just wanted your thoughts on that.
Well, yeah, it brings me to an interesting thing that I think is really, really important, and that's, basically tightening credit and higher yields that nobody is paying one bit of attention to. Bonds, as we speak right now, are on the lows. They were up this morning. They faded. They're basically trading nearer the contract lows on this move. I think the yield is close to 309. Mike, do you have that yield?
I have that. 3.09 is what I have on the 10-year.
Yeah, so we got 3.09. So we skipped to my lewd through 3. We're at 309. I saw some comments from Gunlock, which were surprising, that he thinks that yields could go to 3.25.
He must be out of his shorts, Larry.
I don't know what he's got going on, but he said if we get to 3.25, it's a nail in the coffin, and it's over. The bull market is over. I think the bull market has been over for a while, but again, we could see a skip up, and at some point, this is going to weigh heavy on growth and on the market. Obviously, this is classic, as one of my friends who probably will be mad when I mention his name, Lawrence Altman, who I've traded with my entire career. He sees this as well. It's just basically, a bias to the buy side for expiration, and there's nothing anybody can do because there's too much money basis the cash out price for tomorrow morning's opening, and nobody cares what they pay. It's an interesting thing that at some point, later on, not today, that we'll get into, as far as, I would call it, I don't know, they use a lot of VWAP now, but it's like marking, and you'll notice it in S&P futures on the close. Like when we get a minute to the close, they know where the VWAP is probably going to be, and then the market gets so liquid, like, you'll see 3,000 minis up. Like right now, the market's 100 to 200 minis up, not real, but on the close, it's 3,000 up at least. So these are interesting things that people that are in the market should understand and know really what they are, and we will point that out, but at a later time. So as far as the dollar, the dollar's getting hit hard against basically everything across the board. Mike pointed out to me, I think the pound is at the 133-ish handle off of some good retail sales. It's not really moving too much. It was in the high 127s, so it's probably had a 5-figure move up. The euro is basically trading at almost 118, 117.66. We've been here up and down a couple of times, so we'll keep an eye on that. The Canadian is not really moving. It had a good move down from the 132 handle into the high 128s. It's 129. I'm not trading it. Greg would have better opinions on this, but I would probably be a buyer of dollar 129 area for a trade, off of the move we've had. Again, I'm not doing that. I'll leave that up to Greg. Gold is moving up a bit. If you want to chat about that, I'd love to hear your opinion there.
Gold, thank you. 2 days ago we had a nice move in copper, and I think I've been saying for last week or so that if we're going to have a meaningful move in gold, it's probably going to be led by the precious and the semi-precious silver and industrial type products like copper and platinum. And we're getting that. We've had that if you look at the 2-day moves of those products, and gold has kind of languished. So I think mechanically speaking, you might be seeing gold lagging because people are now putting on these, arcane spreads: buy platinum, sell gold, buy industrial, hedge out the precious aspect of it. You might start to see some of that, and that may hold gold back relative to the other products. But without being cynical, as a person who's friendly to the yellow inert brick, if you look at it as an emerging market, because that's what it is, it's suffered with the emerging markets, and the dollar is dumping. The bond route is, I guess, kind of spreading across the yield curve, but gold's only up, $2-4. So if you're bullish gold, buy something else that goes up with gold. I don't have anything on my radar for signals, but the prices are very.
What about the skate and the teens? You like that? So we're getting close to that. We're
that happens. It actually happens in every team: 11s, 12s, 13s. But to your point right now, the numbers are really simple. First of all, to become to have a resumption of the bear bias, the real big bear bias, we got to break 1189 now. But now we're in the 1210 area, and gold hating the teens doesn't always mean it rejects the teens. It means it'll go through the teens as well. So at some point, and I don't know when that's going to happen, you're going to hit the teens and skate up through it. But for the last 3 times, it has rejected them viciously. Right now, I am friendly, although I am not positioned in gold, looking for, coincidentally, because it's a team, looking for a buy entry above 1213.40. On the sell side, I'd be looking for an exit in the 1196 area. So that's pretty wide. We've had some pretty big ranges for gold, relatively speaking, but not to stay too long on it. Gold's in a range of a range of a range. And so below the teens, you could be simply bearish. In the teens, you should be flat. And above 1221, we could have a real reignition of gold acting like a proxy for the dollar. Hope that helps.
No, I appreciate it. I don't have a position, haven't traded in a while. It doesn't move enough. The market I wanted to touch on that we haven't yet is the oil market. And oil had a big up day, traded at the high end of the range. We had been stuck, between like 71.5, 72, all the way down to the 66 handle. We're at the top end of the range, and the market was trading pretty firmly this morning when we got in. And then Mr. President Donald Trump came out and basically called out OPEC. Interestingly enough, we had Phil on yesterday, Phil Flynn from the Price Futures Group, and Phil was pointing out that this weekend there is a meeting of OPEC. I don't know, exactly if it's all members or what it is, but it's supposedly, I don't know if it's so secret, but a non-scheduled situation. And I think that Trump is basically holding the screws to these guys, and he's extremely pissed because oil's back above 70. And if it sustains here, it's definitely not bullish for world economies. So I think he knows that, and maybe he's being told, but he's laying heavily on OPEC, saying, "Hey, listen, if you guys don't help us now, when you're in trouble, we're not going to help you." So
normally I'm not like pro Trump rhetoric, but when a couple of days ago OPEC comes out and says we're quite comfortable with referring to Brent oil being above $80, I think his response is actually warranted. And when you look on the sidelines, every gallon or barrel of oil that Iran is not pumping is being pumped by Russia, because Russia may adhere or follow OPEC's rules, but I do not believe they're actually bound to them. So, Russia is like above their normal production levels, and yet oil is still where it is. So, in this case, I'm on Trump's side, hoping that there is some reaction. I think they're probably going to meet this weekend, and Phil will tell you better. Okay, who's going to cut back? Not me, not me, not me. Okay, Saudi Arabia will cut back a little bit, and then everyone will cheat anyway. If if past is any prologue, but
yeah, I don't really know, what's going to come out, but Phil thinks it's an important meeting. If they increase production or whatever out of this meeting, you could see oil a couple lower at least. So it'll be interesting to see over the weekend what comes out, out of there. The interesting thing to me, looking at markets, is the S&P is up if the dollar's weak, the dollar's strong. Bonds are up, bonds are down. If Europe is up, if Europe is down. If Asia is up and Asia is down. And to me, I think it's part of this buy-side rig that's going on for expiration. But overall, I just don't know how the market's ignoring every external signal out there in the market. So I don't know if you have any thoughts on that.
Just based on what you're saying, if I were an analyst just listening to you, I would say, okay, let's draw a chart. Let's put the S&P over in a corner, and then let's look at every other correlation, because the S&P does what it wants to do because it wants to do it. Maybe we'll trade bonds off the dollar. Maybe we'll trade emerging markets off of FX, but we'll just trade S&P off of S&P, because there's nothing else that seems to affect it. And I don't even mean that cynically. I just mean that as a trader. Day trade the S&P, put your macro positions on in products that have correlations that hold up. That's the only thing I would add to it.
Yeah, I mean, that's what it is. I mean, I think it's a lot bigger than that. It's just the rig. But, you'll wait till tomorrow. I've been saying it all week. So, we had a little bit of a down trade, I think, on Tuesday. And after that, straight up. So it'll be interesting to see what goes on. I'd like to be short oil. I'm going to wait for it. If it rallies a little bit, to sell a little. I should have sold this morning. I wasn't as aggressive. I've been focused on the S&P. I'm a little, I wouldn't call it upset, but I'm a little surprised they took this move so early today. I thought you'd see this print tomorrow.
Right.
I don't see the trade as clearly up at these levels as I did before. The only thing I do see clearly is that we want to be short S&P minis at 9:30 tomorrow morning.
Job claims, I don't mean to interrupt. Initial claims came out at 201. Expected 208 to 210, I think. So let's see what stocks do right now on that.
Probably nothing. I mean, they're not looking at anything.
Also, looks like Philly Fed came in a bit better, came in at 22.9 versus 18. New orders 21.4 versus 9.9. Yields picking up a touch on it, basically at the high of the day.
Yeah. Gold looked like it was going to rally a little, hasn't moved. S&P hasn't moved off that a tick. So quiet all around. Let's look at the one that's fascinating to me is Tilray. It actually came in $10. It's only up 20. And listen, I've seen this story for years and years and years. I saw it in the internet with K-Tel Records and Knickerbocker.
You are so old.
Knickerbocker Toys. They made the Marie Osmond doll. The stock went. That's a call out to my buddy Doug Cass, who writes for The Street, and we traded that stock in the 90s, and we watched that stock go from 11 to like 300 to 0. So timing is 9/10 of the law. These stocks are overvalued by 90%, but the problem is people want them. is a short squeeze. You can't borrow it, and it sets up a self-fulfilling prophecy. So I would not in any way suggest, they're good traders. You could trade them both sides, but I would not suggest, shorting them just yet, because they can go a lot longer. And as you know, there's a lot of people short them that they're squeezing pretty hard. So, that's what I see there. And overall, we touched on the dollar. We touched on oil, bonds, S&P, and Nasdaq. I'm surprised that Nasdaq bounced so strongly off yesterday's lows. I think the futures were down about 60. They closed flat. Now they're up another 40. So it's
there's a lot of things against stocks being up right now, and I think they will assert themselves. The bond yield stabilizing above 3%. I know it's like a broken record. Bond yield stabilizing above 3% should, I think, give one a bias to sell strength rather than buy strength. The emerging markets stabilizing means money out of the U.S. into the emerging markets, whether you believe that or not. I'm just saying that, there's going to be some rotation internally, but I can't see yields continuing to rally and not competing for U.S. money, even if it is U.S. money overseas that's coming back to consider buying its own stock or buy bonds.
Yeah, I don't really know. The only thing I know is that vol is come in hard here. September vol is still at 1260, but the actual cash volatility is in the 11 handle, which the whole thing is shocking, to be honest with you. It's it's a shocking situation. Vol is back down here. It looked elevated. We saw the skew between front and back really wide, expecting a move. But really, you can't put this in your head other than the fact that this is expiration related. It's basically biased to the buy. It's always that way, so you got to trade it that way. Now, that doesn't mean we can't come in 5, 7, 10 handles here as a trade, but that spread is about $5 between front and back, and we think that it's a big time short, meaning you want to be long front, short back, and then you want it to expire, and then you want to basically stay short futures and then come in and either buy upside calls against it and sit in the position for a few days. But we'll look at how all this stuff cashes out and come to you with some ideas. Since we've been on the air, oil has taken another leg lower. I do think the bigger trade in here potentially could be a short into the weekend, into this meeting, and you short the futures and maybe buy an upside call, very vanilla, just to hedge in case. But maybe there's a couple of bucks in here if they up production. So it'll be interesting to see. I think today will be a decent trading day. People are sort of not trading the market. They're trading all these crazy stocks. They're moving just really unbelievable. I saw Tilray. There was some news after the close. I saw it trade down like $35, and then it was up. So they're moving $30, $35 every minute. And we'll keep an eye on that. Apple got stable here, so probably hold the market in, and that's what I see for this morning. Any other thoughts before we close up?
No, nothing to add to that. You've got it. It sounds covered to me.
Great. So we should have Greg Watka on talking. He's our FX guru. He should be coming on, giving a brief synopsis of sort of what we touched on, but he has a much more granular focus to tell you where he's making money or looking to make money. Then at 9 o'clock, we have Joe Vaklovic discussing the overnight ag action. And then I'm going to come back on after the opening once these options open to see if there's anything to do. Not expecting anything, only because they've taken the trade away. I hope people, had the ability to, get long off of this beforehand. Then at 10 o'clock, we have Tony Greer. Very interested to hear what he has to say about the cannabis sector. He's our stock guy. He's in the chat all the time, giving his thoughts. And then at 11 o'clock, we have Bryn Kelly coming on, and she will discuss, which I'm interested to hear, nat gas, which we really don't talk about. Had a little sneaky move up here. I don't know if it was hurricane related or what, but it went from the $2.70 area to the $2.90 area, which is a pretty large move, and I'm interested to hear if she has any thoughts there. And then interesting to hear her talk about electricity and, again, the hurricane, because she was queuing off that before the storm. So it'll be interesting to hear what she has to say about that. And, that's pretty much the schedule of webinars today. And we will be in the chat all day talking and trying to come up with some ideas.
Sounds cool.
All right, Vince.
Happy to be here.
I will see you in the chat, Vince.
Hey, I'm expecting you to have some sort of an opinion at 3:30 on Micron. Seriously,
Me?
you know the product.
I'm
Earnings are out.
I'm bullish.
You know the product. Earnings are out.
I like the stock at 42. I was pointing it out. It's now 46. For me, that's a good enough move for me to head to the exit. I would not take it long into earnings. The only way that I would is by covering the position with puts, maybe the 40 line, so at least you'd be protected to where you bought the stock, and then have the ability to have upside. But for me, I don't like to give back $4.
Gotcha.
So I don't think if I were long it that I would take it in long. Now, if you're planning to hold the stock for multiple quarters, then it doesn't really matter. So
there you go. That's what I wanted to hear. Yeah. So you have no play on the option side in the sell side, despite the fact that it's stronger going into earnings.
No,
don't play going into earnings.
I will look at it and I will come up with some strategies. Right now, I'm looking at this future spread. And when I say that for people that are listening, it's we're trading December futures on a day in and day out basis right now, because the front month is going off the board tomorrow, so there's not a lot of liquidity and people don't want to trade it. But the future spread is trading at about $5 or $5.05, and it's interesting, under. Okay, so September is under December. It'll be interesting to see where this thing goes out. I think the thing is going to go basically the other way by at least $5. So I think there's stuff in there to do, but I'll be back later to discuss it again. A lot of the problem that we have is the market's up $11. We are not looking to get long up $11. So a lot of the trade has been taken out, unfortunately.
Right. Too many people front running your ideas.
Exactly. Well, I gave it to you a couple of days ago, but that's for another day. And it's interesting. Just one thought: like, these markets go from no bid to no offer. Like our market always has a bid, the S&P. But like, imagine trading a market when it has no bid. Like the DAX had no bid for weeks and weeks and weeks and weeks. And then all of a sudden you turn around and it's back to 12,300 from 11,900. I mean, these are massive moves, and they're in one direction. It's like 7 days up, 20 days down, so there's a lot of cross currents out there. The bonds in 10-year, I think, could be the biggest cross current that no one's paying attention to, but you will bet your last dollar that on the first down day in the market, they're going to blame the yields. So I don't know if that's coming next week or when, but whenever that is, they're going to tell you that rates are above 3%, but we'll be above 3% for a week before they even discuss it. So
Right.
we'll keep an eye on that, and overall, that's it from here.
Cool.
All right, listen, have a great day, everybody, and I'll see you in the chat.
See you in the chat. Thanks, Larry.